McDonald's reported third quarter results this morning and shares shot up almost 9%. To determine if this move is correct, we're going to plug the details from the press release into our earnings model and take a look at what the price move result is. So we'll be accessing the company's latest press release from their investor relations page. The first thing that you notice, if you scroll down to the Outlook section, you can see that they gave no guidance this quarter. So as we go through in our model, we're going to leave the guidance that they gave us from the last earnings report in the model, and we'll just highlight those sections so you can change them if management comes out with additional guidance or additional details on the earnings call this morning. Now, if you're new to our modeling approach, please visit our website, gutenbergresearch.com, where you can find this model and download it, and you can also find a description of how the model works. Just a few quick highlights that you should know. Anywhere you see a blue cell, those represent our estimates. Purple cells represent company guidance, and orange cells represent consensus estimates. You'll see we have two models up. We have the one on the left side, which was calibrated to consensus estimates. You can see here in orange, just prior to the release. And then we have the new model that we've updated this morning, with the actual details for the income statement and the segments, and then we have made some assumptions, but you can see the orange has gone away because we've removed this. It's no longer calibrated to consensus. And you also notice that the heading changed. So before this, September 2015 was an estimate, and now it's actual. So there are a few things we want to point out here. If you scroll down to our segment details, you'll notice that the company-operated sales beat what was in the model before, and again, the model before was calibrated to consensus estimates, so beat the estimate. And the revenue per store was actually much greater than what we had calibrated in our model. So to compensate for that in the future periods, we actually increased the revenue per store for company-operated sales, and what we tried to do was get our total revenue back to the same growth rate that existed prior to the release. So you can see here, based on consensus estimates, the expected growth rate for the fourth quarter was a decline of 4.5%. So now we wanted to keep that in our model as well, and we did that for the March quarter and the June quarter. So now you can see that even though the total revenue number is not equal to a consensus, it's still calibrated based on the consensus expected growth rates prior to the release. And that's probably a conservative estimate now because the company had such a big beat this morning. And to do that, again, we adjusted the revenue per store. We didn't make any changes to the franchise fee revenue. We just kept that constant because there really wasn't much of a difference between what we had in the model prior to the release. Now, the company-operated restaurant margin and the franchise restaurant margin was much greater. So you can see in the prior version for the September quarter, we had 16%, and now it was we had 15.6%, and now the actual was 15.8%, so it beat by 20 basis points. So as a result, we increased our estimates for the next 4 quarters by 20 basis points. And we did a similar procedure for the franchise restaurant margin. So we had expected 81.6%. The actual was 82.2%, beat by 60 basis points, so we added 60 basis points to each of the next 4 quarters. Okay, after the restaurant margin, you scroll down to the other ratio section of our model, and you can see that we had expected selling, general, and administrative expenses to be 9.1% of total revenue, and the actual was 8.8%, so it beat by about 30 basis points, and we then took the SG&A expectation from our model down by 30 basis points for each of the next periods. And then if we get back to what management's guidance was, they had guided net store additions to 350 new stores by the end of 2015, and so that was the guidance in the last earnings call. They only added 37 new stores this quarter, so that will probably be revised downward. But for now, we set the fourth quarter additions to 203 so they could reach the guidance by the end of this year. The effective tax rate, they guided to 32%. So there's really no change there. Not a big surprise in the effective tax rate. Still meets management's guidance from last quarter. And then return of capital. So this is the shares repurchase and the dividends. They had guided this year to be between $8 billion and $9 billion, and now after this quarter's share repurchases, there's only an additional $630 million left for repurchases in the fourth quarter, assuming the dividends don't change, to get back to the midpoint of that guided range. So it's likely that they'll actually hit the high end. And then they also gave guidance on the 3-year total capital return. So they said that should be in between 18 and 20 billion, and that would be closing out at the end of fiscal year 2016. So right now we have our share repurchases set up so that they'll reach that 19 billion again, assuming not a huge change in dividend growth rate by the end of the second quarter. And you can see that these share repurchases are very low. So 330 million for each of the 2 quarters in 2016 and 630 in the fourth quarter of 2015 relative to what they've been repurchasing. So there's probably a good probability that that will be revised upward. So now after updating the model with the actual details and those few items that we mentioned, you can take a look at what that did to the share price. It went from $109 expected target price to 113, so almost a 4% gain, which is much lower than the 9% that we're seeing in pre-market activity. So again, these were on the conservative side, and that 9% is probably taking into consideration the fact that the street will likely increase their growth estimates after such a strong beat this quarter. So the price move probably does make sense. Be sure to check back after the earnings call and again in a few days after the new consensus estimates are out, when we'll update this model to recalibrate it to that consensus. And thanks for watching.